Will the European Central Bank change course and reject negative rates? Central bankers do not change their minds easily. It took a nearly 20% dive in the U.S. stock market in Q4 2018 to convince U.S. Fed Chairman Jerome Powell that raising interest rates on autopilot was not the proper course of action. The Fed paused the rate cycle, stocks recovered, and the U.S. economy has kept on growing. The ECB introduced the concept of negative rates in June 2014 by imposing a 10 basis point interest penalty on bank deposits held at the ECB. The thinking was that if lower rates were more stimulative than higher rates, then negative rates would be more stimulative than zero rates. The Bank of Japan followed this logic and did the same thing as the ECB. The U.S. Federal Reserve did not. This kind of linear thinking has been a disaster. Commercial and investment banks could not pass on the negative rates to their clients. Profits suffered, and so banks constrained lending activity, the exact thing the ECB was trying to encourage. Economically, the evidence is clear. Europe's performance has lagged the U.S., and Japan has suffered as well. Now, what leads to a change in central bank policies? Guess what? Changes in leadership. And in October 2019, the ECB will get a new president. A new president can admit the mistakes of the past, end the penalty rates holding the banking sector back, and stimulate economic activity by going to a more normalized monetary policy. The euro might even rise too. I'm Blue Putnam, Chief Economist, CME Group.